Hello and welcome to another episode of Casual Friday. I'm here with the Duck. We're going to talk about Bitcoin, shitcoins, billionaires beefing on Twitter, ex-billionaires beefing on Twitter. No shortage of those in this environment. But yeah, Don, how are you doing? What's new? Are you excited by this weekly candle that we're looking at? What's going
Oh,
on in the pond?
very, very excited about zero movement. No, I mean, it's snowing outside and
Oh, nice.
uh, prices haven't disappeared yet. So, like, there's two things to be happy about. Um, Other than that, it's just like life as usual. I mean, the whole Twitter debacle that's going on right now, like everyone's just turning against each other, is like on one hand it's a little bit amusing, right? But on the other hand, it's just so fucking sad to see.
Oh
Like
man.
it's like an embarrassment. You start realizing like the people that you actually thought were quite knowledgeable and quite the like I mean, that they had like at least some sort of maturity just turn out to be children, all of them. Like Sam, CZ, Kyle, Sue, everyone that's been like beefing on Twitter is just embarrassing, right? And then those kind of people are like the leaders of crypto. It's always nice to see, right? Um, so that has me a little bit in the dumps because I'm just like, this is what everyone that looks in from the outside is going to see. These people that first blew up and then go at each other. Like, yeah, it's embarrassing, really. But yeah, doing okay otherwise.
It's the best and worst time to be on Twitter because it's so like sort of on a primal level it's very entertaining because it's also public and catty and bratty, all that type of stuff, sort of just like yellow pages TMZ type of drama. But it is very depressing in the the state we're in that got us here. Because in the bull market, you complain that like, oh, the only people getting engagement now are like stupid moon boys who like don't know anything about markets or cycles and don't care, and everyone's shilling IDOs and NFTs, the whatever profile pictures, that type of stuff. It becomes tiresome in its own sense. And then everyone's like, oh, I can't wait until the bear market. It's just so much more authentic. And then we get there and it's garbage as well. Yeah, you got to pick your poison. We will cover some of that stuff, but no shortage of content on the Twitter side. As far as markets go, it's been a week since the last Casual Friday. As always, thank you to our audience for all the feedback there. Leave a like on this one, subscribe, all that kind of cool stuff. It has been good, and we thank you for your support. Market hasn't done all too much in that week. It's since we last spoke. It's kind of just it's
Mhm.
green so far, which is nice.
$20 green.
$20 green, yeah, you take what you can get. I saw in your live stream you talked about how a lot of the time on the weekly time frame, if you see this type of like diagonal multi-week small candle but stair steppy structure, like like a sort of steep uptrend type of thing, that's not something you want to fade because it usually ends in some sort of squeeze or acceleration. How many
Mhm.
more weeks? Well, first of all, that's proof that I actually watch your streams, even though they're an hour long, and you never watch any of my 15-minute videos. But I've said that before, and it's had no impact, so I don't know why I keep mentioning it. It's like this girl who was like, "Oh, I always text you first," and then you never text her first, and you just keep fucking doing it. Not that I know what that's like either. I've got like no applicable analogies in this case. Whatever.
Uh,
As far as this goes, how many more weeks would it take for this weekly chart to, for that argument for you to be like, okay, this starts to look very much like those previous points in price action? Like we're talking
uh,
2, 3. Are we there already? What's
Two, I
the
think.
take? 2.
As in, like this close to screen and a little bit higher than it is right now because this is pathetic. And then the week afterwards also, and it starts looking really like moony to me. Right now, it's slugging along basically. And to defend myself on the accusation that I never watch your stuff, I'm a busy man nowadays, my friend.
Oh, so you have to
Um,
flex your personal life on me as well. So not only do you not watch my videos, which are 10, 15 minutes, but you don't watch them because you've got a whatever pregnant model, gorgeous girlfriend, ideal family life. Thanks. Your apology definitely makes me feel a lot better.
okay, I'm glad that we sorted this one
It's
out.
completely sorted. Yeah, yeah, yeah. Exactly. That's also why I antagonize you on Twitter, because like when you're bull posting, I have to like bear post to even it out, and so we can come back around and see, Technical Roundup called it. You have to, we didn't keep you in the dark. It reminds me of this certain paid group that existed through the bear market in 2018, 2019, where you had
Oh
two
yeah,
analysts.
beautiful.
And at the time, again, market structure was completely different because you only really had BTC and like BTC to trade for the most part, ETH a little bit, but it was all like on BitMEX and these dodgy Quanto contracts, which were like BTC margined futures for altcoins. So it was really messy compared to the linear futures we have today. But you'd have two analysts, and they're all trading on BitMEX, and there's like one move to trade per day, right? Because the volatility was completely dead. And a lot of like at first there was some crossover and congruence, and like they're posting on different enough diversity, I should say, and they're posting on different time frames, the different trades, that type of stuff. But then they basically started counter trading each other, which is the funniest thing ever. Because like it's literally there was like one move per day. There's no vol, and they're like one of them goes short, one of them goes long, and then the group's win rate was always miraculously high because they just like basically cancel each other out. Or one of them was right, and that was spun off very favorably. So that was just kind of gave me a funny recollection. It's like when you see a lot of these. This used to happen a lot more back in the day. It's much better now, thankfully. How people would take like post a setup, and then their first take profit would be like 10 points away from their entry for like 0.1R or 0.2R, like basically anything just that barely covers the fees, and that would be TP1. And it goes like TP1, TP2, TP3, TP4, TP5, TP6 or whatever, and so the win
Yes.
rate gets completely grossly inflated, which doesn't make any sense at all. But also when they're calculating on their magical Excel spreadsheet, which never had any read-only API keys or anything like that, on the magical spreadsheet of truth, it was always the final take profit that counted towards like the total gain on the trade. It's just like, I don't know how I got onto this topic. Maybe it's because I haven't slept in like 24 hours, but it's just all these bear market type of recollections keep coming back. And we've definitely seen some shit on the trading front. I think the reason I wanted to go there is also because on the note of this sort of walk up stair steppy pattern, it doesn't tend to happen as a bearish retest, right? I think that's an important kind of point of context. Normally this type of stuff is trend reversing, or at least leads to quite big moves. So like when
Yes.
6k broke down, this didn't happen until after the market had bottomed, right? If I remember your example correctly, it's the stair step from like 3 to 4k that was the example that you used before it teleported. I think there was a similar one after the March crash. The stair step. I remember writing about this with you in Technical Roundup as well. The sort of March, April type of period where you just had like these weekly wicks that marched up through the 6k level and then squeezed to, whatever, 10 and then went up from there. And then I guess you could also make a similar-ish case, although not as much, the Sailor absorption at like 9k as well was, that's like a minor version of that. But basically, and I think the secondary point to make as well, I want to get your take on this, the reason, I just don't think there's a ton of evidence to suggest that those types of squeeze end up being bearish retests. Because when these big high time frame breakdowns have happened, they haven't come back to retest if the trend was going to continue. So like when 6k broke down, it didn't come back to retest anything. When 30k broke down, I know it looks like there was a retest, but there really wasn't. That's about as breakdowny as it gets. And so with this 20k breakdown, if you're betting on downtrend continuation, you kind of don't want this thing to get anywhere close to 19k, right? Because at the very least, you have to start entertaining the argument that if you do find some sort of resistance, lower high, whatever, it'll come off the back of a squeeze that's going to be an uncomfortable to sell, nonetheless. What do you think of all that?
Yeah, I think it's actually like you could buy into 19k. Honestly, I would not judge anyone for buying resistance at 19k if we go to 19k, just because you'd think a bunch of people would short it, and you'd think a bunch of people that didn't buy lower would actually want to have a position. So you have enough squeeze fuel and you have enough kind of ammo to push it higher. So you would not want to see it go to 19k if you're bearish. If you're bearish, I think you'd want to be shorting here like at 17.1, 17.2, maybe 17.5 or something, but not much higher. Which is interesting, right? It's basically saying, hey, don't short resistance, short below it. But exactly like you said, these kind of breakdowns usually don't retest. If they retest, it's a false breakdown most of the time, at least on the weekly. If you're looking on the lower time frames, it's a little bit of a different story, right? But if you just zoomed out, like these kind of moves, they tend to not come back. And if they come back and you're shorting, you're offside.
They tend to not come back like my investments. No, my metaverse projects are fine, trust me. No, thank God I didn't hold any of that. I would be terrified, man, you know? Like, it's always the stuff that comes out at the very end of the cycle that I find most terrifying. When you have, like, NFT projects raise, like, 20 million and say they're going to build a AAA video game, and I'm like, no, honey! You know? Like, that kind of stuff is so scary. And so you basically had a ton of projects, like, soft rug, essentially. And I think that's also just a generally an understated part of the industry. Like, people love to focus on the explicit theft, but if you have any intelligence about you, you just kind of, it's so much easier to pretend to build and then play the whole, like, oh, you know, like, tough macro environment, being a startup is difficult and it's so competitive, we didn't find product market fit, and doing all that type of stuff while just taking a fat salary and then just, you know, just sort of backing off. It seems like, you know, on a risk adjusted basis, a much better way of doing things than just, like, taking the money and trying to tornado cash it. My tangents are crazy. I really need to sleep. In any case, as far as the technical stuff goes, we talked about the weekly time frame. If we look on the daily, the market's been like pretty reasonable, you know. So
Yep.
if we look at the range that we wrote about in Technical Roundup, the sort of 16k to 17.6, it's been pretty sort of price actiony as far as that kind of stuff goes. Because you had the failed breakdown at 16k, right? That ended up finding failed to break down, found resistance, pulled back a little bit to a lower high, then it broke above the range midpoint at 16.7, 16.8, and then during the course of this week, that's pretty much exactly where the market bounced sort of yesterday and the day before that, right? So I mean, if you kind of zoom out and take an overall view of that, you have a failed breakdown at the range low, a range midpoint reclaim and retest. The only kind of level that's been untested in this range is the range high, right? It's sort of 17.6, 17.8. Do you think as long as this daily closes not a lot worse than it is right now, that's the next logical target for this consolidation? Or do you have other ideas for this thing?
No, I think that's reasonable. I think in general, this just looks like it wants to go to the upside, more so than the other way around. The consolidation has just been like a straight line. Like, we have a push up and then you go straight to the right. That's not necessarily bearish to me, especially given that you could argue like, hey, we took out the highs on the 5th of December, right? With that like long wick, and went downwards, and that got bought up pretty quickly. So just price action wise, it looks pretty okay to me. It's just that price action is $100 range or $200 range, which is like, it's hard to kind of make bold calls off of a $200 range.
But god damn it, we'll try. It's like this week's trading challenge: make back your fees. You know, like on a 2-leg trade.
Yeah, that's honestly like, if you're low time frame trading this, your biggest enemies are the fees, right? It's not anyone hunting you. It's not it's the fees that are gonna fuck you over. So in that kind of trading environment, it's really hard to kind of guess where this is gonna go. But the structure itself, if you forget that it's just a $200 range, it's not that bearish to me. Obviously depends on the S&P, and the S&P is an interesting area. But in general, like 17.6, 17.5, that kind of area makes the most sense to me.
What would cook this thing in your mind? If it, like, you know, because we had like a nice big green daily candle yesterday within the range that also tested the range midpoint. Is it a kind of thing now where that's become a clear enough line in the sand where it's like if it closes below that, then the whole consolidation kind of looks like resistance and it's there? Is that fair, or what would make this thing look a bit shitty in your eyes?
I think that's fair, and it's kind of cool because I bought like pretty low into the 1600s.
Well, yes, that is cool, DonAlt. Thank
you. So the thing is, right, whenever you get to buy these like low-ish in these kind of environments, you can kind of start moving up your mental stop loss. And in this case, now it's quite a bit away from where I originally took the trade, which makes it much easier to hold and to kind of assess the situation. Even though I'm not really up a lot, right? Given this shit just moves like 5%, but it's still like, at least there's some structure between price right now and my entry, basically, and you can have that structure invalidated while still being in profit, which is just comfy. You don't want to bleed out too much in bear markets, and I try
Yeah.
to avoid it at all costs. So yeah.
We're building a decent little trend line as well, if you use the wicks at least on the daily time frame, from the lowest wick made to the higher low, and then to the low a couple days ago. You know,
Yeah.
there's a decent little trend line building. Maybe if that turns into some sort of triangle thing, that would lend some credibility to the squeeze argument. But I think broadly speaking, yeah, and you know, 17.6, 17.8 resistance, invalidation or things that would look bad as anything below 16.7 or failing the range midpoint, given how much time we spent above it. So all those positions would be, you know, underwater and they'd be below whatever this trend line meme I drew. So that'd be it. And that kind of paints a pretty straightforward market, right? You have 16.7 as a pivot, 17.8 is your first trouble area, and everything in between. Just try not to bleed your ass out in fees, I think is a reasonable summary.
Yeah, I agree. I mean, it's a shitty market for low time frame traders. It's a shitty market for high time frame traders too, because you have to wait shit long.
Right.
Like it's really hard to buy something and then see it move like 2% up, 2% down, 3% up, 2% down. Like that kind of, it's just, it grinds. Like it kind of kills you a little bit with every single day, and that can go on for like 6 months, 12 months before it does anything. And every day you look at it and you're wondering, okay, is it going to be up or down today? And then at the end of the day, it's nothing. It's just sideways. And that's the horror for any trader. But I think that's kind of what we're stuck with right now, which is not that cool. I still think the best advice that I can give anyone that doesn't do this professionally, which I think is probably most people, is just walk away. Buy when we get into the 19K range again. Like if we reclaim 19K, that seems really good. Or buy when we hit 14K, 12K, 10K. Anything like that is gonna be a good trade in my eyes. I'd be very, very shocked if it wasn't. And when you have that clear kind of trade right in front of you, you don't necessarily need to squeeze something out of the 2% range. Because if you're trying to, good chance you're just gonna bleed the fees like we talked about, or in general, just lose your mental fortitude. Because let's say you buy 20K reclaim and it goes to 40K, that's quite nice of a trade, right? But let's say you bought 16K and it goes to 20K and you're like, I cannot take this anymore. This took so long and I'm up so much, even though you're not really. And then you just sell because you just don't have the willpower anymore. Because every day you're in a position, your willpower basically to hold it goes down, at least for the normal people among us. Some people, the longer they are in a position, the more backholdery they get. But for a trader, right, it's just like you don't want to be in a position all the time. So you kind of, your mental model goes to, okay, I want to get rid of this. And then you look for reasons to exit. So I think sometimes you're actually going to make more profits on a trade by taking it late rather than early, just because you have more mental fortitude to actually hold it to where you want it to hold.
Yeah. And that's a very real thing. I know it might sound wishy-washy unless to people who haven't experienced like a low volatility environment, but we've seen that so much. Like the most notable example again will be like the 3K bottom, right? The one that happened in 2018. Like the people who held that, they sold at 6K, a lot of them, because you had to, you know, you were underwater for months if you bought that first impulse, especially if you averaged down, you started buying at 4s or whatever, like both of us did, you know, that really takes a hit on you. And all those months that you're sitting at 3K, you're going on Twitter every single day, people are saying, oh, there's no bounce, it's just a consolidation before another leg down, why would you buy 3K if you can buy 1.5K, and so on and so forth. So then when it goes to 6, oh my god, you've been in purgatory, you know, volatility purgatory for like months, and you get a 2x and maybe even more on your altcoins. Like people were selling that as like hell. Whereas the, you know, then the people who bought their 2x, so bought above 6K, then had a much easier time holding to like 10, 12, 14, and so on and so forth. So the mental capital thing is like very real. And, you know, there's opportunity costs associated with tying up your capital as well and all that type of stuff. So yeah, I agree with all of that. As far as the ETH side of things goes, I mean, we talked about the monthly, how it looks better than BTC because it didn't close below support, which is nice. The development on the weekly is, I mean, it's still in the same spot that it was, you know, it's been for a few weeks, which is this clunky, awkward sort of underside test of 1300 or thereabouts, that low. Every, you know, like, it's closing below resistance, but, you know, it's spent a couple of weeks there now, it looks like. You know, is your gut feeling that it's just going to squeeze through this at this point?
It kind of does look like it, yeah. I'm not entirely sure. I mean, it's at resistance, right? So,
Yes, it
I
is.
mean, you phrasing it the way you did, as in like, is your gut feeling, is a good kind of
Yeah,
phrasing
because it's not
because
technical, right?
it's very much not technical. We're at resistance, but yes, to me, this looks like it wants to slow walk the same way that I kind of painted for Bitcoin, slow walk through that resistance and then just gigascend. Now, that's just my gut feeling, right? I don't have a technical setup for this other than, okay, you just slap a stop loss at like 1,000 and then you have like your target in the 2Ks and then you just send it. Basically, that's the only technical setup that I have, and it's not the best one, as you might be able to tell given my phrasing. But
Slap a stop and send it.
yeah, exactly.
Let's go.
It's not necessarily the most professional way to kind of put it,
Hey, I
but
mean,
that's.
professionalism in this past market, Don. Christ.
Oh yeah,
Look at the
there's very
professionals.
little of that. The professionals are very unprofessional, and everyone that has like an annual picture has actually been much more professional than all the people that have been doxxed.
Yeah,
It's just how
yeah.
it is.
We're not the
But
ones hiring lawyers, right?
yeah, but yeah, I think that's basically it. Like it feels like it is gonna go through it, but it's resistance, right? So it's pretty tough. You don't want to be longing into resistance, but my gut feeling is that it's probably gonna walk through. Um, but I mean, like I said, it does rely a little bit on the S&P. The S&P is at support for me, so you at least have a little bit of tailwind on that front. And honestly, just looking at the current ETH weekly candle, it's barely red, right? It's not that bad if you compare it to like the S&P, for example, that is down quite a bit. And it's the same with Bitcoin, like they're holding, and famous last words, right? Before the so far
Don
comes.
making decoupling in disguise arguments here.
Yes, but it's like it's holding up somewhat, but it's a little bit early to say. So um, for me, gut feeling, yes, should be up, but I could be completely wrong on that front. And I don't have a position on. I've been thinking about it very, very hard actually. Like I've been thinking about putting more money into ETH, basically rotating my Bitcoin into ETH, all that kind of stuff. So far, I haven't done any of it. Still thinking. But if you
Yeah.
go to the daily, honestly, sorry for interrupting
No,
you
no.
there, with the 1.3K resistance, basically,
Yes.
whenever I see this, right, this kind of move into resistance and then sticks around right below the resistance, while honestly, like most of the market is very bearish. This just kind of seems like you're gonna be running out of sellers at 1.3K eventually. And the thing is, that's also the whole consolidation that we had between mid of September to end of October. Like that whole area of kind of like sideways trading.
Yep, circled it.
If you come back above that, it starts looking like on a daily, it starts looking really, really good, right? So you have like this low time frame resistance at 1.3K that we've been running into constantly, and yeah, just if that breaks, it starts looking really good. And yeah, I'm not entirely sure if it's gonna break. That's why I don't have a position yet, but it does kind of look quite nice to me,
It's
honestly.
lights on above that level.
Yeah, finally again.
I always
But
love
it's
how we end up.
interesting.
Go on.
It's interesting we haven't made a new low, right? And at this point, I don't think you can really say it's lagging anymore because I mean, if this is lagging, this is the longest lag that we've ever had.
People were so mad at
In
your tweet when you said that ETH is like carving out a higher low while
Yeah,
Bitcoin didn't, because they're all on the 5 minute. Whereas
yeah.
you're looking at like a monthly chart. To me, it was the funniest thing ever. People like trying to ratio and stuff, and it's just completely devoid of context. I do love coming back to the relative strength versus lag discussion though, because it never gets old. I swear to God, I'm gonna be on my deathbed in like my 90s or something. You know, grandkids hopefully gonna come up and be like, "Oh, look, you're doing so well compared to all your other friends who are dead." And I'm just gonna be croaking like, "I don't know if it's relative strength, if I'm just lagging," and then the heartbeat monitor just goes flat. You know, like I can't ever get away from that concept. But yeah, I didn't disagree with you at all. The only thing that gives me pause on this, I mean, I'll add a couple of things. First of all, on the weekly time frame, if you go on the line chart, this bearish market structure has been so clean, right? Like ever since the top at the ETH merge sell 2K whatever, that's just been lower highs and lower lows in the most unambiguous way, right?
Yeah.
So I think any rallies that do happen off the back of a 1.3K break, I'm gonna have to sort of treat it as a squeeze until proven otherwise. I mean, if it gets above the last lower high at 1.6K, then the chart starts to look pretty damn outrageous, right? Because then you've got like weekly market structure downtrend into a squeeze that then shifts weekly market structure and makes a higher high. Then you're cooking with gas or whatever the idiom is. Because then you have like a real case for a high time frame like reversal, and then you can sort of pull out the monthly targets at that point, which are, as we know, towards 2K plus, right? 2.3K, 2.5K, whatever. But that would be like a real shift in behavior, the kind of premise that we've talked about, where you have like a break of resistance, and if that doesn't actually make a lower high but makes a higher high, like that's pretty notable. We haven't had that in a very long time. But I definitely do want to see evidence of that. I agree with that daily consolidation that you kind of pointed out. That entire range and getting above it would be cool. I think if you look on the daily time frame, as you said, it's at resistance now. There may just be, well, at least I'm very open-minded towards this type of setup, where 1.3K is the top of that range, and all the daily closes have been super clean at that level, right, as far as resistance goes. So I think even just like a 50 IQ breakout trade there, where if it closes above that, at the very least, you've got like a setup and an invalidation, right? So setup would be close above that daily resistance. Invalidation would be a close back below. And then you target anything just that just looks like a squeezy daily breakout candle, and ideally like a big puke and open interest. Something like, and you can target what, like 1.4, 1.5K if you want to be conservative, something like that. That to me is like a setup at the very least worth having on your radar, because the ingredients are there for like a decent size move, but more importantly the invalidation is there also, because the level is so clean, your invalidation will probably be quite clean as well, and because it's like a breakout style trade. Not only do you have a price-based invalidation, you also just have a time-based invalidation. If it doesn't squeeze after closing above 1.3K, then I mean you're fucked. It's probably not going to squeeze at all. So that's something that's definitely on my radar. I mean, we're sort of half shilling this thing at resistance, but I think it's a setup worth being aware of, because if it's going to move above here and sort of materialize on the weekly time frame or whatever else, if the setup's good, it'll be a quick one, I think.
Yeah.
So that's definitely something I've got mapped at the very least.
And the thing is, like, it plays in really nicely with the ETH weekly chart, which makes it a lot more explosive whenever you have these kind of setups. And then you see on a high time frame, right, a setup that could actually also go that way. You have at least a little bit of confidence, and you can put your targets further away. And with ETH basically kind of chilling at 0.077 again and again and again and again, like we've hit it a million times. The moment we start breaking that, you have to expect quite a big move to the upside, even if it's a false breakout, right? Because even if you kind of fake everyone out, you go to 0.1, and then come back down. That's a nice trade, right? If you get into ETH at 0.08 or something, and then you trade it all the way up to 0.1, that's a 25% move, and would very likely come off of Bitcoin strength as well. It's just kind of how the market works right now. So that's a trade where you make 30, 40, 50%, right? And that's interesting to me, especially given, I mean, if it's not a false breakout, but a real one, I think you'd threaten the flipping really fast, and that'd be, I think, a nice take profit area for me for the entire market, basically. Like the moment if ETH flips Bitcoin, I probably want to run. And
Bear market flipping, yeah.
I mean, that'd be horrendous, right?
Yeah,
Like
gross.
you flip Bitcoin during a bear market. That'd be quite funny, but also scary. But also a lot of money to be made, right? Because
Sure.
that's a 2x. That's a 2x from here against Bitcoin, and Bitcoin I think would have to go up with it. So I'm looking at it very, very closely. I think there's potential there, but you don't want to pull the trigger like too early. You don't have to. That's the thing, right? With the market being as it is, you have a lot of structure to work with. You had a lot of kind of areas where a lot of people will be like, okay, oh, this is a bearish retest, like 19K, and they're gonna start shorting it, and I think that's where it gets really explosive. We're stuck in this shitty area where you just don't know, right? Because there's room to the upside, there's room to the downside, but the moment you go up a little bit, there's potential for quite the massive move to the upside, and the same thing, honestly, to the downside, right? Let's say you go back below 16K, it starts looking really, really shit really fast.
Yeah.
I'm not expecting it, honestly. Like, this structure on the daily looks quite good to me. I don't really, I think up is much more likely than down. But if we go down, it starts looking really shit really fast. That's just how it is. And given that situation, can just wait. I don't really hate on that either.
Yeah, exactly. Like as we said, ETH is still constrained even by its daily range right now at 1.3k, right?
Yeah.
So that's kind of the first thing. As I said, yeah, I agree with all of that. That consolidation to the left on the daily ETH chart is like, pretty meaty. I'll cover this more in the Monday stream or whatever, but as I said, any daily close above 1.3k, I'm going to look to catch a piece of that unless it's too unreasonable, and look for, I've literally got on my chart the range breakout target daily, range breakout target weekly as a conservative one, basically around 1.4k. And even that, sort of, if I get 1.3k to 1.4k plus, if I can catch that, that's for a day trade or intra week trade, that's plenty, I think. And also, you can never exactly predict what the sort of funding dynamics are going to look like and how the futures participants are going to act. Like, for example, if you take that trade and then you see price just starting to prices bid up, and then funding goes like turbo negative or whatever, and it's spot starts pushing or derivatives really start fading it, whatever combination there may be, you can make assessments as to what the fuel to that move might be as it's developing, right? And that might change your targets as well. So there's all sorts of nuance and context you should be open-minded towards. But at the very least, yeah, ETH above 1.3k is sort of the first eyebrow-raising thing on the bullish side. For the time being, it's kind of at the range high, not breaking out, not collapsing either. C'est la vie. As far as downside stuff goes, I don't know if you'll agree or not. For me, it can come in one of two forms. Maybe both, but whatever. These are the sort of two ideas. One is if it tries to break that 1.3k, and we've got like a bunch of highs stacked there as well from when it's tried to break the level in the past. Like, it breaks and it just completely fails and falls back within the range. So basically a failed breakout of 1.3k that takes out the highs. That for me would be really shitty. That's just sort of, directly contradicts any sort of momentum or bullish idea. It just looks like a spike at resistance at that point. That wouldn't be terribly exciting. And I think if you want to, look at the midpoint of the range at around 1.2k, the bounce got front run a little bit depending on how you draw your levels. But I think anything below 1.2k starts to look rough as well, because then you're dealing with the market basically moved from support to resistance, and then from resistance to below the range midpoint. At that point you expect the range low retest naturally. So if you're looking for red flags, any failed break or lack of movement through 1.3k, then the market is just stuck at resistance. And on the continuation side, anything that gets accepted below 1.2k just makes the lows look vulnerable at that stage, to me at least.
Well said.
Cool. Do you have a light Ponzi update for us? It's still very much in daily consolidation mode. I'm wondering if the DonAlt of old at this point would have been concerned that it hasn't moved more and that it, the breakout isn't as aggressive as it should be, or is the Litecoin Bitcoin pair still keeping your faith strong even though the Lord acts in mysterious ways?
The thing is, like, if you open the Litecoin Bitcoin chart for a second, right, and this is always funny to me. This is kind of basically like a lot of people just peek at the daily and they're like, oh shit, right? But then you just open the weekly chart for a second and you look at it and you had a strong move to the upside, a little bit of sideways, another strong move to the upside. And honestly, 2 red weeks that are very tiny in comparison to the move up, just at one glance, right? You can see that this is just basically going sideways. This, if you just remove the left side, looks like typical bull market behavior. Where you have massive up moves, then you have shallow pullbacks before expansion to the upside again. I don't know why Litecoin is this strong. I don't know what this is caused by, besides just people buying it, I guess.
Bro, I
But I'm
love the
down for it.
insights we're getting, right? It's like if you remove the left side, it looks like a bull market. It's strong because people are buying it. We're just full of fucking gems on this channel, to be honest. I get why
Oh yeah,
people love Casual Friday so much. I
you
mean, where
listening
else
to
would you hear this,
experts.
right? More buyers than sellers. Fucking hell.
I mean, but the thing is, like, what you can see is obvious relative strength, right? In comparison to everything else. Obviously, like, whenever you have something that is really, really strong for like 5-6 weeks, there is a time where it goes sideways. At best, there's obviously also times like when you go like crazy up, when you double basically, then you pull back 30%. But in this case, it's very, very shallow pullback on the Bitcoin pair. So I'm not really concerned about that. I'm not concerned about the speed either. I'd expect this to go for another week or two sideways before you get the next move, if you get the next move. So yeah, I'm not really concerned, honestly.
What about the
I
USD
don't.
pair? And how long? Because I asked you on Bitcoin, like how long would it take for this weekly? How many more candles until the weekly really starts to look squeezy? I guess you
Yes.
can ask the same question on the Litecoin daily or even weekly for the USD pair. How many more days or weeks of non-movement slash further consolidation would you be like, okay, this, if I'm expecting an impulse consolidation impulse, I expect the impulse by now as opposed to a BART type of thing. When does that start to kind of shift or skew?
I think I'd start getting worried about this actually moving up if it didn't move up in the next 2 months on the USD pair.
Crest alive. Next 2 months, that's like 3 market cycles.
Yeah, but honestly, like just look at it.
Yeah,
It's a
yeah.
range that broke to the upside. It's in the middle of a new range. If it goes sideways here, that's best case scenario. That just seems like reaccumulation to me. Obviously, it wouldn't be best case scenario if Bitcoin mega mooned and you sit in Litecoin and it goes sideways. That's why, like, it depends, obviously. But this looks good to me. I don't really see a good reason to be too afraid. And time wise, like, there's no real invalidation for me for a chart that looks like this, unless it just keeps on going sideways for too long. Because at some point, there's going to be other trades that I want to take. For example, like the only thing that makes me struggle with Litecoin right now, and the only thing that makes me think, okay, do I actually want to like move on, is basically ETH, because ETH looks really good to me too, and I want to, like, if ETH breaks that 1.3k level, I might actually want to just move over to ETH. Like, that's the only thing that I have in my head on the Litecoin front. I'm not nervous about it. Oh, it's gonna go down or whatever. I'm nervous about getting outperformed by. This is the only thing that I'm really worried about.
It's a good
I don't
problem
know
to
if
have,
that's
Duck.
yeah, I don't know if that's like a foolish confidence in the market just in general, just heading up, or if it's well founded. But like that's kind of thoughts I have right now. Like, hey, if I'm sitting in this, am I actually gonna lose on ETH? That's why I've been looking at Litecoin USD divided by ETH USD to just kind of see, like, and now we're entering full weird mode. But basically looking like against ETH to gauge whether I'm still in the right trade, and so far it looks good to me still. But yeah, my plan basically, and I explained this last stream, last Wednesday stream, is to catch a Litecoin mean reversion on ETH, which basically just means I want Litecoin to almost double against ETH, even though, like, I don't want to have ETH go down. I just want to see Litecoin have relative strength that takes it to mean reversion on ETH, and then I want to jump back into ETH.
Sure.
That's the plan for now. I could obviously change it. I generally want to be in ETH, not in Litecoin. But given how strong Litecoin Bitcoin looks and how strong Litecoin USD looks, because the thing is, right, we're talking about ETH USD making a higher low, and we're like, oh, this is so cool. Litecoin didn't even come close to make it. It just went up instead, which is even more relative strength, right? You have Bitcoin, then you have ETH, which shows relative strength against Bitcoin, and then you have Litecoin showing massive strength against ETH. Obviously, could make the next coin is gonna have even more than that, hopefully. But you can go. Maybe you can go down the list, but I cannot find anything that looks much better than Litecoin. So I'm chilling in Litecoin, seeing how that goes, giving it the room it deserves for a setup like this. And then obviously not a fan of Litecoin in general. Like the moment I start seeing signs that I don't want to see, I'm gonna dump this thing and never come back. But so
Until
far,
next time.
so far nothing really. So yeah, it can take a few months sideways, as long as Bitcoin doesn't make a moon, because I wouldn't want to lose on Bitcoin as well. Like I don't want to lose on Bitcoin, I don't want to lose on ETH. I want to be in the crypto asset that's the strongest, and for me that looks like Litecoin is. But yeah.
Mate, a few months. If you hold Litecoin for a few months, I'll become a fucking Uber driver. Like, if I promise you that much, like, come on. That's just so mad. And also, I mean, at this point, for $100, I'll delete my weekly resistance that I have at $79.50, $80, because that's clearly capping all your P&L. So I'll send you my Tron address for your USDT transfer after this recording. That's clearly the only thing holding the market up from your Moonboy targets of not even 100 to 120 or 130. That's not good enough. You know, we're talking like 300-400 and all sorts of. I mean, you might as well become one of those YouTube influencers right at this point, right? Where basically every altcoin target is in your all-time high. Otherwise, what's the point? So I think you'll find yourself in good company.
With all the drama, I've had to watch like 1 or 2 BitBoy videos, so maybe that's been infectious. Don't ask me.
I mean, I can't even judge you. My YouTube guilty pleasure, as you know, is Richard Hart. So, like, this is. I'm not even judging you. You know, we all have our own tastes, to say that much.
BitBoy is very much not my guilty pleasure, just for reference.
No, sure. Now he's walking it back. I agree on the altcoin front. I personally don't have anything else that's particularly interesting there. Sort of BNB, range midpoint, Dogecoin, whatever. Like, yeah, not a whole lot there. On the S&P front, which we touched on earlier, we had some economic data come out just before this stream, which was PPI, I think, came in slightly hot, market nuked, and then sort of bouncing back, reverting a bit now. I think the more important part is just going to be, you know, CPI, FOMC, later on this month, as opposed to these sort of smaller data points. And it seems, for the most part, the market is pricing in a 50 basis points hike as is. So, you know, those are much more pivotal than the releases we're getting at the moment. I think our S&P view has been unchanged for some time now, which is that the 3,900 level is like really important. And that's a very good line in the sand to have, essentially. And I think we also argued that, you know, this whole downtrend line that we saw Morgan Stanley shilling. Like when banks are drawing trend lines, you know, you're in some sort of special market. I think
when it's went like to the downside, right?
I know, especially. I think this test that we've had might be the last time this downtrend line is actually relevant. And we wrote as much in Technical Roundup, but at this point, when it's just, you know, people are seeing it in their sleep, I just don't think it's going to do anything. I don't think the next test is going to do much. I don't think if it breaks is going to be super bullish. I don't think if it breaks above, breaks below is going to mean much. I really think in terms of, you know, you've tested it 4 times now in major swings. I think it's just done. Because, like, with levels, you can have a lot of tests, and then the level still stays relevant when you get, like, a reset, if you will, on the failed breakout or whatever. And, you know, those structures are still important. But I find, in general, trend lines are just a bit more transient when it comes to their sort of properties. And once it's sort of run its course, it doesn't do anything, you know, on a break, on a deviation, that kind of stuff. It sort of just fades. And the example we used was the Bitcoin downtrend line in 2018, right? That was like the big boy, and you have an article about that on Medium or whatever. And then that broke and just didn't do shit. I think we're in a very similar point with this downtrend line. I think the levels are much better. Specifically 3,900 as a pivot, and then, you know, the range low at 3,700, you know, the upside range highs at 41, 43. Those are all really good. To me, this trend line's pretty much reached expiry. Are you in the same boat with more or less 3,900 do or die kind of thing, and everything else is more or less noise?
Yeah, I think 39 is really, really good. So I wouldn't expect it to break this soon. And given we're kind of pushing against that trend line, and not just for the second time, but technically for the 4th, and we're gonna go for the 5th. I think that's gonna break if you just stress test it a little bit more, which I think opens up the road for 4.1. that's what I earlier said, like the S&P is at support, and maybe we get a little bit of a tailwind because we're at support. That trend line is garbage, I think. But people still look at it, obviously. So I think there's going to be some trading activity around it, which could easily squeeze us upwards, especially given that a lot of the newer market participants that have been getting into the option trading and all that kind of stuff have been betting quite heavily on put. Like in general, like you have a bunch of people that shouldn't be using options at all, just trading options, and they're gonna make
Stop
the decisions.
gatekeeping, Don.
Yeah, I mean, we've seen how it works, right? When people get, I think they're traders and start going on platforms like BitMEX and like whatever, even in crypto, right? And then lose all their money, donate it to the insurance fund, which is still massive, still hasn't been paid out, which is kind of funny to me. But yeah, for me, we are at support and that trend line is shit. So the more probable way for this to go, in my opinion, is up right now anyway, at least to the next resistance. Could be wrong on that front, but the S&P's been pretty technical, and whenever it's broken a resistance, you technically expect it to at least go for one more. The same thing has been true for the downside, right? Whenever it's broken a support that had follow through, besides the last one, given like if you look at the monthly, basically the
And that was Signal,
3.7K
right?
level. Yeah, and that was Signal.
Yeah.
That was perfect. And 3.7, even on a retest, right? Because we had a wick back into it, held perfectly, moved up. So
Yes.
given that we have the same thing now on the weekly where we had like a false breakdown below 3.9K, you'd expect 3.9K at least to act as like at least to act like for a while as support, which means basically I think we should be holding here for a while. If it's like a week or two or three and then start falling out of it, okay, but I would be surprised if we just basically lost it immediately and then traded lower next week. Just doesn't really seem likely, but it's not my market and I don't have any position running on it. So take it with a grain of salt.
Sure. But that's how the bigger picture starts to come together for your thesis, right? It's like Bitcoin is flipping levels, ETH squeezing against resistance, S&P retesting important support. You know, you kind of just build up these factors of confluence. I'm wondering if it were to fail below 3.9, could you see yourself entering like sort of a coat mode where you're like, okay, 3.9 is lost, but 3.7 is still this really important monthly structure, so it's not actually as bad as it seems? Do you see yourself sort of gaslighting the audience in that type of fashion if it were to happen?
I mean, sure. I honestly, in general, in this situation, like it's two different trades really. The one is basically very short term. Longer term, 3.9 is the level. 3.7 is the level to hold. Like the 3.9 level doesn't really matter too much in that regard, especially given if you go back to 3.7K, we actually start forming like this inverse head and shoulders structure. So maybe a little bit. I'm glad I don't have to trade this because whenever you have two really good levels this close to each other, you never really know what you want to be doing because it is very dangerous to fall into this cope mode where you're like, oh, my level failed, but there's one below that, and then there's always another level that you can justify your bias with. So a little bit, honestly, I could see myself fall into that. Good thing is I'm trading Bitcoin, I'm trading ETH, I'm trading Litecoin. They all have their own invalidations.
Yes.
The S&P is more just confluence, so I don't have to worry about it too much. I just know, hey, it's in the area of support. And I have a thesis for Bitcoin, ETH, and Litecoin anyway, so that's just going to strengthen that thesis. But yes, if I was just trading the S&P, you do have like a little bit of a problem there, just given how good support below us is. So
Yeah, that makes sense. The final point on the macro LARPy stuff before we go into some headlines is we talked about the Euro USD, which is the biggest constituent of the dollar index, and all these things are related. So, you know, dollar strength usually means equities weakness, and, you know, all these correlations we've talked about at length. Euro is at a mega retest level, right? There's sort of 105, 107 monthly cluster, range low, whatever. And that's off the back of a multi-year breakdown. This is the range since like fucking 2015. You know, that was the long time floor on Euro. broke down, and we're sort of on the underside of that now. Now it's a monthly level, and we're at the beginning of December. Well, sort of 1 week in. So this could take, I mean, it wouldn't be unreasonable for this to take a few months to play out, or at least 1 month to play out before it sort of sets a bias or expresses a preference. But you know, this thing is at resistance. Does that give you any pause, like in general? I mean, I agree that the setups themselves have invalidations as far as the short-term trades on, you know, BTC, Litecoin, ETH, etc. But in terms of structural macro flow type of stuff, you don't get to see or trade these levels particularly often. You know, these huge multi-year whatever. Do you think about this stuff? Do you track it? If it starts to really sort of shape up one way or another, would that be like enough signal for you to for that view to trickle down into your crypto portfolio management at all?
I mean, yes, it's a little bit. That's the one thing that doesn't agree with everything else I said. Basically, the euro looks like. I mean, I bought a bunch of euro at the lows, and I sold it basically a little bit below where we are right now, and basically expected the euro to go down, which doesn't really agree with everything else with my positioning as well. So that's like the one thing that doesn't really agree, which makes me a little bit nervous. But it's just one thing out of many. So I'm still down to kind of trade the other way. But yeah, it is like a little bit worrisome. And it's a really good level. It's basically as good as it gets. And with the euro against dollar, if you look at the monthly time frame, you can actually see that important levels do matter, right? Because with Bitcoin, for example, you have a big breakdown like this. You came up. If this was Bitcoin and you came up to like this level, I'd be like, just fucking send it. This looks like it wants to send, right? Because it's Bitcoin. That's how Bitcoin trades. With euro against the dollar.
Oh, I'm just looking at it now. I know where you're looking. I've already drawn the box. Where the last couple of highs came in, where that's like a flip and a half, right?
Yeah, like 1.22. That area. It's just like these kind of levels really work on.
It's over.
On the high time frame, right? So you can run into them a little bit. We even had like a little bit of a close above resistance, but they still act as resistance.
But it did take like months, right? So you know,
it exactly took quite a while. And I could see this take quite a while too. But yeah, it's a little bit worrisome, and these kind of levels do work. So it's not like it's because I could see people in the comments be like, "Hey, but you said stuff when it comes back, it doesn't look back." That's crypto specific, necessarily market specific. Usually these kind of high time frame levels, they nuke you, right? You try to long into them and you get absolutely rinsed. It's just with Bitcoin and with crypto in general, when you have these big levels that get broken, these big floors, if you run back into them, people actually realize, holy fuck, I want to own this shit and I don't own any and no one's selling it to me anymore. And then they squeeze into a tiny door. To paraphrase, I actually don't know who that said, but yeah.
I think it was like Jesus, wasn't it? Seek to enter through the narrow door or something?
Maybe.
I think so. Look that up.
Anyway, when you have, like in crypto, the door is very narrow. So once stuff starts moving, people try to rush in and there's really not that much size that you can get. So people have to buy into these kind of levels, basically, if they actually want to position. That's why in crypto, usually you run away. In traditional markets, you have all the time in the world to sell the level because it's a high time frame level. It should work, and it usually does work. So yeah, that disagrees with my thesis. It's not a perfect thesis anyway. Never is. It's just how trading works, right? You'd never have all the cards. You just
if you do, it's too late. That's the beauty of it, right? If you wait for everything to agree with you, it's usually the end. Like if you're waiting for an uptrend on every single time frame, then I mean, God help you, it's pretty extended at that point, most likely. Exactly. Also, yes, Luke chapter 13. Then Jesus went through the towns and villages, teaching as he made his way to Jerusalem. Someone asked him, Lord, are only a few people going to be saved? He said to them, make every effort to enter through the narrow door, because many, I tell you, will try to enter and will not be able to. So, you know, there you go. That's the...
Oh, shit. Well,
he knew. Of course he knew.
Looks like I'm more educated than I thought I was.
Exactly.
Yeah,
wonderful. Yeah, I agree. That makes sense for the macro stuff. We'll keep an eye on it. And obviously, you've got end of year flows and, you know, CPI, FOMC, and much, you know, heavier hitters coming in, so plenty to work with on that front.
Yes.
Let's jump into a few headlines. What have I got? One sec. Let me open these up. I actually got a fair few. Well, we can try to zoom through these. So the first is about this. You saw that I think it was Maxine Waters with the CFTC did a joint tweet asking for Sam's testimony, and he said initially he said like I'm still trying to get more information. Then he says yes, I will come or can, and then they said they're not afraid to subpoena him, but they haven't yet. It's kind of been very sort of flip floppy and back and forth. And now the interesting thing is I read a tweet thread from Pope Hat, who's a U.S. Constitutional lawyer, I believe. I used to read him, and even when I was back in law school, even though it's a different system, his tweets were very good. And he has this really interesting Twitter thread where he basically explains from like a white-collar crime point of view why people aren't justified in being outraged that like Sam's not in handcuffs yet. And the thread basically goes. Well, I mean, it's funny. The thread starts by saying it's because you're an unserious person with the attention span of a sugared toddler, which is hilarious. But then he goes on to basically talk about like how these types of procedures work. And white-collar crimes generally have more complex and difficult intent requirements. That's the mind state of the defendant or the person being accused. Often you have to prove fraudulent intent or even specific intent to break the law. That's much more complicated than proving the dude robbed a bank. So it's basically talking about like you have to gather so much evidence and speak to witnesses, and so you have like a super strong case to present to like a grand jury and so on and so forth. So like it basically goes into the strategy as to why it might not be the best idea in most cases to just pull the trigger immediately and make a big public show of it, because from the white collar point of view it might weaken your case. So it's a very 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 interesting thread for people to read, and there's basically a lot of like strategically it's just rushing it doesn't make a ton of sense. So maybe that gives us some hope, Don, of justice, and the wheels move slowly as opposed to you buy off the media complex and a few senators and hey ho, you're good to go. So that'll be interesting, and also depends on whether he actually goes and testifies and all the stuff involved there. So I mean that drama's not going anywhere. We also saw him in a Twitter beef with CZ this morning. That was lovely, right? So CZ, to his credit, his threads have kind of been fire. Like as far as sort of addressing a lot of this stuff, they've been pretty factual, and like I haven't disagreed with much of it. And in this one, he basically just again went through the history. He specifically started with the Kevin O'Leary thing, saying it seems 50 million not only changed Kevin O'Leary's mind about crypto, it also made him align with a fraudster. Is he seriously defending SBF? And then goes into Sam paying journalists and all their sponsorships. Didn't mention Technical Roundup. I mean, we're the big fish, obviously. I'm surprised we didn't make the cut in that thread. Just kidding, obviously. And then Sam, obviously, narcissist as he is, goes into U1 CZ, and then he goes into some like history about because Binance, for the audience that doesn't know, was a very early investor into FTX, and then FTX bought out Binance's stake at a huge markup, and then they CZ and Binance still received some tokens from that, and then they said they're going to sell them, and that was part of the whole bank run. There's beef and drama and bad blood there, and so they're sort of going back and forth, and Sam saying you didn't even have the rights to pull out as an investor unless we chose to buy you out. We gave you 75 mil on top, extra this, that, and the other. And then, CZ was saying, don't try to tell your friends to focus on us, focus on yourself. You should have learned that by now. And then also, I think the Financial Times had some leaks from a group chat that Sam and CZ were in, where, he's basically got into a bit of a scuffle about, like, Alameda doing some trading on Tether, and CZ being like, just stop doing everything, put on a suit and go to Washington. I mean, the whole thing is just completely comical, but also farcical at the same time. You've got one billionaire and one dude with like $3, or I don't know, whatever Sam's got, that one credit card with 100K. Although I would be very surprised if he had zero money just offshored somewhere. I think he's too intelligent, and his parents are too intelligent for that not to be the case. But yeah, you sort of log into Twitter and you see just, billionaires, ex-billionaires, people who blew up, people who now have all the market share in crypto, just fighting each other over the sorry state of the industry. And that's the state of the market that we're in.
And basically, in my view, what's happening is basically a bunch of people that have done shady things in the past, that have that are still doing shady things, such as using each other to excuse their past behavior or their current behavior, and it's absolutely vile. I've seen a lot of people do it. Three Arrows Capital, one of them, they basically just been like, "Hey, this was not our fault. It's all Sam's fault." And then Sam's like, "Nope, it's not my fault. And then they just keep shifting blame, right? And they keep shifting blame in the circle. And at the end of the day, the only one that really looks like an idiot, I mean, besides all of them, because it looks like it's 10-year-old people arguing, right? But not only do they look like idiots, we all do look like idiots, because they, for better or worse, represent the industry and what it's about. And I think it's leading to more loss of confidence than people actually think. Especially given that Sam had quite the good image, like he managed to build quite a good image of himself that a lot of people, including myself, fell for. And then you have like, it just looks like, it just looks like a fucking comedy show at this point. Like, you scroll through Twitter and you see these ex-billionaires arguing about whose fault it was, even though it was clearly everyone's. Like, it was theirs. It was like, I mean, all of them kind of have done shit or are doing shit, and it's embarrassing, and I'm so tired of it, honestly.
Yeah, it seems like that's not going anywhere for a while.
Yeah.
At least from what I can tell. And also, there have been unnamed influencers, because fuck litigation. But as we said, using this type of drama to whitewash their own past. You know, it's like if they were doing shade, potentially morally imperfect actions that might raise a reasonable person's eyebrow in 2021. Now they see all this grief and drama as a good chance to sort of shift focus away from that and try to play superhero and sort of be in the eye of the media storm to deflect away from that, which is strategically amazing but incredibly cynical and opportunistic. But hey, that's how you survive in crypto, I guess, if you want to be that type of person. This was a very weird tweet. It came from Coinbase. I don't know if you saw it. It said, "Switch to a trusted stablecoin, USD coin, now convert Tether USDT to USDC with zero fees." And so people naturally started reading into this, being like, "Oh, Coinbase knows something. They know something about Tether, and they're sort of giving the market a tap on the shoulder and that type of stuff." Tether didn't depeg or do anything like that, and they were very resilient during a lot of the Luna stuff and some of the earlier pressure on the peg. But, so a lot of people sort of tap this in general as being some sort of forewarning. I'm not entirely sure it's that. I think a simpler explanation might be that especially in this type of high yield environment, there's a ton of competition for stablecoin market share. And Binance wants a huge chunk of it, and they're already like monoliths in the exchange space, and so if they get the stablecoin space on top of that, then I mean, unbelievable, right? That like Binance becomes the market, and so you can understand why, especially given USDC recently cancelled their IPO or SPAC or whatever sort of public listing it was. They probably don't want to fall too far behind. To me, this is just trying to, in a bear market, people smell blood, and they want to capture as much of the stablecoin market as possible. And given how lucrative it is now, it just makes sense. I don't think it's necessarily anything much more nefarious than that. And I also think we're pretty lucky nowadays that there are so many good sort of, at least compared to what we're used to, high quality, white labeled sort of solutions for stablecoins with various sort of amounts of regulatory clarity, that you can be a sort of you can just choose what fits your risk profile, and you're not stuck with one. Like, it's not only Tether, for example, like it was for much of 2018, 2017, and so on and so forth. So you can sort of pick where you land there. But the tweet was very interesting because you have exchange owners going after each other, you have stablecoin issues going after each other. It just seems like I'm going after you on Twitter. It's like no one is safe.
Yeah, the thing is, right? Like, in the bull market, everyone's like, "Let's just be together and be friends." Like, you just have to look through the exchanges that Sam and CZ had in the bull market.
Oh man,
and
yeah.
then you go through the comments that they've thrown at each other in the bear market. It's comical. And I think it's the same with USDT. Like you said, I think it's just them trying to grab some market share, basically, because Tether makes a shitload of money off of just the yield that they generate. So yeah, I don't think there's any warning or anything like that. If anything, they're trying to make it look like one, so they get more market share. Which is kind of funny. Like anyone that attacks Tether, I don't really trust. It's an odd thing. Like I don't trust any stablecoin really, right? But anyone that attacks Tether flat out is, in my experience, just not too trustworthy for some odd reason. It's just always the weird shady actors that do it. In this case, obviously, don't think they're too untrustworthy, but it's a bad look. Like I don't really see why you want to be doing that. Um, in general, what I can only recommend, right, when you're in crypto, you don't want to have all of your money on one exchange. You want to have the like whatever you're trading with on multiple different exchanges. So if anything goes wrong, you're not fucked completely. You're just partially fucked, and you don't want to have all your money in a single stable coin because if something goes wrong, same story, right? So you never have all your eggs in one basket. But yeah, it's an odd thing. Like Tether's weathered more storms than anyone else in the space, really, besides Bitcoin. So like if there's stable coin that I have more trust in than the other ones, it's probably Tether, which is funny because Tether has the most people that are very, very against it.
Yeah, I mean, look, the natural pushback to that would be like, out of all the major stable coins we have now, the only one of which we have a clear legal record that went for meaningful periods of time being not fully collateralized, as per court records and the NYAG's findings, is Tether, right? Whereas a lot
Yes.
of stablecoins now, you can actually go look up the specific P something, whatever acronym code I forgot, to see the specific sort of treasury bond that they're holding that's backing the USDT or, sorry, USDC or whatever the stablecoin might be.
I,
So
I
out of,
honestly
go on.
Sorry for interrupting. I honestly think there's a good chance that Tether wasn't quite fully legitimate back in the day.
Oh, I mean, it wasn't.
Um,
I mean, we know that as a matter of court record, right? Like, it went
yes,
through periods where it was like 60%, 75%. They had that freeze and crypto capital and all sorts of weird stuff. Like, you could state as a fact that there were periods in time where Tether wasn't backed one to one, which is a break of their promise and a break of their white paper. And just on those grounds, it could be like, I trust it less than a stable coin where I can check the counterparty that's holding the treasury bond for them, or check the backing for myself, and so on and so forth.
yeah,
Like you can
but
do that. But as you said, I think you could just be smart about it. Like if that's enough for you not to hold Tether, I think that's an entirely reasonable position. You don't have to. Like there's enough stablecoin ecosystem infrastructure now to where you don't have to hold one specific stablecoin, and that's the only way you can interface with crypto. There are tons of ways of doing it. But I think, look, if you're like a new entrant to the space and you have to like poke at one, it kind of has to be Tether, right? Like it's very crypto native for us to argue for like Tether's lindiness based on what we've seen it survive, but the historical record like isn't terribly kind to the earlier history of Tether. I think the trend's been improving, and you can see they're like holding less commercial paper over time and like more transparency. I mean, still lagging behind its competitors as far as just the sort of cash equivalents. Here's what we hold them, boom, done. But it's held off a lot of storms, and there's better transparency than it has in the past. But like, yeah. Like I'm just trying to sort of almost play devil's advocate. It's like people who are skeptical about Tether. I get it because as a matter of history, it's gone through periods where it wasn't fully collateralized.
yes, but honestly, like in general, you could argue this exact point for honestly almost every cryptocurrency. Like Bitcoin started off shady as fuck. ETH, I mean, arguable. You go through the entire list, almost everything just kind of started off like either as a scam that went serious, like everything that survived,
Sure.
or as very, very shady. And the stuff that's just survived for longer just kind of turns a new leaf, which is quite funny, really. Like it's a weird space, right? Because it's basically like, and we had a lot of this too with exchanges that were set out to scam. That actually were like, oh shit, we're generating so much fees. Let's actually just run this for real. Seen quite a few of those during the bull markets, which is completely hysterical, right? When you think about it. But yeah, I don't know, like the stuff that sticks around the longer and longer, like you said, the Lindy effect, basically, they tend to not drop then, at least in my experience. Like for example, FTX was pretty new. A lot of it seemed pretty legitimate from the outside, and honestly from the inside. Like you just looked at it and you're like, okay, this, I mean, seems somewhat legit. There's a lot of they have a lot of interaction with lawmakers and like people that should know whether something is going poorly or not. Because as a normal person, you cannot obviously look into the inner workings of an exchange, right? It's just, you cannot. So you do have to trust, as long as you trade on the exchange, you do have to trust the people behind it somewhat. And FTX seemed somewhat legit, but hadn't been around for long. And then the first proper bear market you get, they just completely disappear and lose 10 billion of customer funds and like completely blow up. And it's like, it's mind-boggling how they can do that. And then you see other exchanges that have gone through a million bear markets and that are completely fine. And it's the exact same feeling I have about Tether, really. Like it's gone through 10 billion bear markets, it feels like at this point, and it's still around. And I mean, just given what they're doing, like what Tether actually is, they're making a shitload of money right now. I'd obviously be saying something else if we were in an environment where having a lot of money was actually bad, right? Because if that's the case and you have to pay for the money that you hold, it's obviously a different story. Then I want to have as little exposure to Tether, because like you said, they're not as transparent as others as I could. But yeah, I don't know. It's an odd thing. I would not trust any of them. I wouldn't trust anything in crypto, honestly. It's the one thing that I've always been very adamant about, and it's the reason why I usually don't get wrecked hard if I get wrecked on security issues, just based on the fact that I don't trust really anyone. Bad on one page, but it's the only thing that's going to make you survive this space.
So paid Tether apologist Don, just ignoring the historical record, and he says the fact that they was less than scrupulous makes them more trustworthy now. There's some mental gymnast. I'm joking, obviously, but yeah, it's just, thing is, it's just a perspective you can't explain to someone outside of crypto, right? Yes. Unless they've seen the attacks, which maybe means it's just like confirmation bias horseshit for us. But yeah, it's just a different sort of hierarchy or whatever. And again, ultimately it doesn't matter. You don't have to you don't have to consign yourself to one. You can swap between them in a pretty liquid and easy fashion, and you can look into it yourself as to where you fall on that risk parameter type of thing. So that was just pretty interesting. I found this interesting as well. Coinbase's Armstrong expects revenue to fall 50% or more. He told Bloomberg. He said that Coinbase had 7 billion of revenue in 2021. Obviously 2022 he's expecting a halving of that, from what I understand. And Coinbase shares have been pretty wrecked, understandably. This is also, look, they're an exchange, right? So they make money on fees for the most part, and fees require volume and trading. And Coinbase is also very much a retail-facing exchange where people go to like buy and sell spot, and they don't really offer derivatives or stuff like that. So it tends to be a good, like it's a good proxy for measuring sort of retail crypto flows. If he's estimating like a big drop off to reflect this year and also just going into next year, I think that also shows his kind of, at the very, if not, I don't think it's purely directional, but at the very least shows kind of volatility expectations, both for how this year has gone and what next year might look like. And to their credit, they've been decently ahead of the curve in terms of, they were one of the earlier ones doing layoffs, not in the most comfortable fashion. When the whole inflation macro picture started shifting, but they were early, which is a sort of kindness in itself. And now he's expecting half or more from last year's, which makes sense as well. So, and I think, we talked about basically last week, we had Bybit layoffs, a lot of these hedge funds, CeFi, other exchanges were having issues. So, the industry is still very much in squeaky bum time, as we say, when it comes to expectations for, like, reflections of this year and expectations for next year. The thing is, cyclically speaking, these guys tend to be like late for the most part, right? because they have to be. They'll always overhire towards the top of the cycle and just like overcut towards the bottom of the cycle, but I think there's generally still some signal there, especially for these big retail-facing venues. So it's something to bear in mind there. I still think, as we've argued before, we're reaching a point now where you can build like a decent-ish boomer crypto portfolio if you don't actually like crypto, where you have like Coinbase, for example, and if you think metaverse is a thing, you buy some meta and you build like a crypto adjacent type of portfolio if you really, really hate crypto. My argument has always been, if you like, if you have a crypto bullish thesis, just buy the underlying coins. People who just try to buy like, oh, I'll buy the miners, or I'll buy MicroStrategy, or I'll buy GBTC, or this, or I'll buy Nvidia, this, that, and the other. Those people just tend to not do very well. Like, I think specificity is good when it comes to that type of investment mandate, but I think we're reaching a point, coming into next year and just in general, where if for some reason you are like hypo allergic to like owning the coins themselves, you can build a pretty decent adjacent portfolio to express the digital asset sector or your views on it.
Yeah, agreed. I mean, at least now there's a way to get into it without having to buy GBTC. No,
yeah, that discount dipped further, didn't it?
Yeah, it's been bad. Like the GBTC discount, let me see.
We funded Ledger on Monday.
Yeah, we did. And, so basically, it went from 40 in November 25th to 42, 43, 43, and then like basically yesterday it went to 48%. So it's a new low. It's almost 50% discounted now.
Oh man.
I mean,
that's the halving no one wanted.
Yeah.
Thing is, Don, I would type in GBTC discount in like Google search, but I've got one screen. If I type in the G, Grinder's gonna come up, so people are gonna just have to imagine it.
Yes, I mean that's okay. You can have yours. I'll just look at the great.
Okay, great. Thank you.
Premium. You look at Grinder. It's okay. We're different. Anyway, yeah, December 8th was 48% negative premium, which is wild, right? That's insane. That's 50%. It's trading at levels that you haven't seen in ages, that you could only dream of for Bitcoin to reach, really. But yeah, here we are. That would take us roughly to what, like 8K levels?
8K, yeah.
And given that back in the day, back when we had 8K levels, GBTC was actually trading at a premium.
Oh man,
it would take us below 6K, like on a relative basis. So if you bought GBTC back then at the 6K floor, I think you're actually at a loss now.
Oh man, come on.
And we're trading at 17K, so beautiful, huh? But
do you enjoy saying negative premium? Do you like saying negative premium instead of discount? Does that give you like a certain sick sadistic pleasure?
Oh yeah, that does.
Okay,
just smile every time.
Just making sure.
I don't know why. It sounds so much better. But yeah, it's scary, honestly. I wonder what's going to happen with this.
We still don't know, right? That's the thing. This is still an overhang in the market, and I think that as recently as 3 days ago, that DCG themselves said this is a thing that's going to take several weeks and not something that's going to happen over the next few days in terms of getting this resolved. The figure I saw floating around was 1.8 billion. Gemini are trying to get a deal sorted for their Gemini Earn clients because that's been frozen because it was done via Genesis. Now you have like ad hoc creditor committees being formed, so groups of creditors coming together and having their interest represented by like law firms and stuff. And that none of that is particularly good for the market. And this is one of those things where if you had the ability to plug it quickly, it would have been done quickly. Like, I don't know if people remember, like shit was getting regularly hacked in the bull market, and the market wouldn't flinch because you could just snap your fingers and raise money. That's kind of what BlockFi did when the GBTC premium like really contracted at one point. I think that they just did another round, and I think it was even an up round, which is amazing. It's like, hey guys, our core yield instrument is like basically a non-starter, and then just raise an emergency round and like overnight basically. To make sure there were no liquidity issues. But in a bear market, you can't do that. No one's going to just throw money at you. So I think if it could have been fixed quickly, it would have. Clearly, it can't, neither from the creditor side nor from the DCG side. So that's still kind of In terms of crypto-specific flows and just general sort of contagion news, I think that's a big one that still sort of hangs over us. We'll see where that goes, and I'm sure we can catch up with Ledger on Monday to see if his view has changed.
Honestly, the best thing that could happen is this negative premium or discount decreasing without actual Bitcoin price going down. Like that would be very bullish. Obviously hasn't happened yet, but that's what you want to see. Like the closer GBTC gets to 0%, as in like just normal trading price, like no discount at all, the more bullish it is, right? Because this is shit. You don't want to have this. The cheaper it gets, the more likely it is that this has some fallout. And there's a lot of Bitcoin locked up in this, right? So you do not want to necessarily see that come onto the market while the market is so depressed. Like if it comes into circulation during a bull market, people are just going to be happy to buy the coins. During a bear market, it's a little bit scarier. So I don't like it. I hope it resolves itself. It's kind of interesting that it went from, like, just looking at the historic data, it went from a 100% premium to now 50%
Negative premium.
Negative premium.
Yes.
I mean, you lost a shitload if you had anything in that. And just looking at GBTC on TradingView, right?
Yes, that's what I had in a second ago.
It's insane. Like the 20K all-time high, right? Back then, like it had such a massive premium in 2017 that it barely managed to get back above during the bull market. And now it's trading below that all-time high by like 80%. Right?
Yep.
That's insane.
It's insane.
Like
such a broken product.
Yeah.
Honestly.
Because right now, like Bitcoin is actually trading below it by 13, and it's trading below it by 80%.
Yeah.
So it's just completely mad. I'm sorry for anyone that has it. I kind of like, I've been looking at it, wanting to buy it ever since basically 30%. I've been like, oh, maybe there's gonna be something there. But given that I get a tax discount for holding longer, it just doesn't make much sense for me. If this goes completely crazy and goes to like 60, 70%, maybe I'll dip my toes, just buy a little just for the fun of it. I don't know if I want to do it at 50% yet. And this seems to go like, it kind of does seem like it's a steady downward walk, more so than, okay, this is capitulating or whatever. Doesn't really seem anything like that. So it's down 50%, but I could see it go down 60, 70, 80%. And the problem is I could see it stay at 50% for years.
And then you're bleeding fees on top of that as well.
And
right?
then you're bleeding you're bleeding 2% every single year.
And again, that's while futures are like backwardated in most places, you know?
Yeah,
so ordinarily
you actually get paid. Yeah.
Yes. That's there's all sorts of dodgy stuff going on. Thing is, this brings into light like an interesting regulatory requirement. So you could argue like this is supposed to be a good product. So look, let me take a step back. If you're gonna make the case for US kind of crypto regulation / protection, you take the case of, if it weren't so horribly commingled, for example, FTX US and the other kind of US regulated exchanges, they're the ones, when you consider the degree of contagion and centralized exchange insolvency and so forth, they were the ones that like were quote unquote protected because of regulation. Same with like exchanges that, FTX Japan, for example, and a bunch of others. So jurisdictions with stronger protections, they sort of made the case for those regulations. Because compared to like FTX International or the offshore branches of a lot of these exchanges, investors had sort of more guarantees there. However, you have to sort of take a step even further back. The reason that those offshore exchanges and sort of, less scrupulous jurisdictions ended up getting so much volume, a lot of the time from US users, wink wink, VPN, all that type of stuff, is because they couldn't get those products in the US. So it's this dilemma where once everything breaks, a lot of the regulations look like they protected investors, but the only reason those investors ended up offshore in the first place was because there was no good regulatory framework to provide them with the instruments they want, like proper derivatives and non-dodgy futures and spot ETFs and that type of stuff. So I still think on a net basis it's a regulatory failure. because I don't think offshore volume would be anywhere near what it is right now, and that regulatory arbitrage in general will be far less attractive if you had at least comparable products onshore. You know, but that's a whole complex discussion. The final piece of news I want to cover: Decentraland will now let you become a virtual landlord. So owners of Decentraland virtual land NFTs can now rent out their property on the platform, and renters pay each day using mana. The platform. This is how Barry's gonna dig himself out of the hole. Renters pay each day using mana. The platform's main cryptocurrency. Dude, so this is the problem with crypto. So a lot of these people come from like, they have like pretty heterodox economic beliefs, and they're obsessed with like saving, or so they speak, or so they think, and the soundness of money. But a lot of the time, that's just a veneer for people wanting to get like risk-free income and wanting to get something for doing nothing, and living this like passive income lifestyle where you actually don't take any active risk or do any management or anything like that, and then your money stays hard, stays beating inflation. You just get this inflow from people who came into the Ponzi after you, and you make sort of money off their backs. So like everyone fucking wants to be a feudal lord. That's what people are trying to rerun. And you see the same in like DeFi yield farming and GameFi sort of pay to earn, walk to earn, everything to earn. It's just like the whole ecosystem seems obsessed with the idea of like, if I'm rich, I want to do nothing and become more rich off the back of people who aren't rich speculating on some derivative of my wealth. Do you know what I mean? Yeah. And yes. that sort of whole logic is so tiresome, and we've built out so much like if you take Axie and a bunch of other stuff, we've built out so much like circular Ponzi-like vaporware based on this very idea that like people just want to park their wealth, and then some cycle of speculation continues to further enrich them. I don't know. I'm being sort of very imprecise with my language, but I think you get a sense of the sentiment that I'm trying to tap into, right? It's sort of another example of it was like the whole complacency that came with the interest rates in DeFi protocols, where once everything was like at 60k and 5k ETH and so on and so forth, it was just like, oh, well, look at these stablecoin returns, right? I can just I never have to cash out because I can just stay in these yield farms and stay lending at these 5, 7, 10, 20% rates, and therefore I never need to rotate out of crypto. And that just seems to be the golden dream for everyone. And we keep coming up with basically very thinly obfuscated ways of doing yield farming with extra steps, be it with land and a landlord and a game and it's pay to earn, or walk to earn and all this other stuff. And I don't know, man, I hate it. I think it's super tiresome. And as we've seen, and it's not just a fault of tokenomics, it's just that it doesn't work. And maybe this will age terribly and we do come up with some super innovative way of doing it, but it seems like people are less concerned with the actual product, and they just focus on the speculative Ponzi circularity of it. And then, the incumbents and the people with capital and the early adopters get rich. And then, just like it comes down as like you can boil anything down to basic inflows versus outflows. At a certain point, that equation flips, and the thing collapses until the next one comes along. So I think a lot of these primitives, especially the ones or verticals, I should say, especially the ones that we started trying to build very, very late cycle, like X to earn, metaverse, GameFi, etc. I think most of it is vaporous garbage. The Steelman rebuttal, and what I hope becomes true, is that it has a sort of DEX-style renaissance, right? Where, as you'll recall, you had like Ether Delta and Crypto Bridge and all these completely garbage DEXs, where even if you looked at them, you'd think, DEXs have no future. And then Uniswap came along and AMMs came along and, basically iterated that tech into something that actually has product market fit and ended up being useful. So that's kind of the only silver lining I can think of, is that we follow a similar pattern where we very late cycle come up with something that's totally garbage, and then through the bear market actually build out something more decent, so the next time you have speculation, maybe you get 1 to 5 useful protocols from that field. But I still think this whole mindset of X to earn type of just trying to monetize doing nothing, I don't like it.
No, I don't like it either. It's basically, honestly, it's always like in crypto, for some reason, the longer the cycle goes, or the deeper you're in the bull market, the more people in crypto try to recreate the shitty things that we have in the real world already.
I want to
It's
be
like,
a feudal lord.
yeah, I wanna fuck people over. I wanna do like, you know, like that whole thing, like that greediness. Every time prices go up, that greediness creeps in, and you get fucked by like basically people trying to take advantage of others.
It's like so rent-seeking. That's the term I was looking for. Rent-seeking.
Yes, rent-seeking. And it's very, like, it's big. Like, the rent-seeking behavior in crypto, especially when it's going up, is some of the worst I've ever seen anywhere else. Like, it's insane. People are just trying to find a way to enrich themselves off of the backs of others. And it's tiresome, and we have it every single cycle we have it. And every cycle, I'm like, oh, I hope this is the last time. And every time they actually get worse.
Yeah,
like
I was going to say, I have bad news for you, Don. Like,
it's just how it is. So I think we're just stuck with that shit.
It's a feature, not a bug.
About it. Yeah, but it's not a good feature.
Well, it gives us the speculation, it gives us the volatility, it gives us the reflexivity, the liquidity, the momentum, and all that type of stuff. So, and realistically, as far as our participation in the industry, how detached are we from it really, right? Like, if you wanted to steelman the position, we'd be like, oh, we're just liquidity providers, and we help price discovery and spot and derivatives markets. But it's like, I don't know, man.
Nah.
Like it's a bit too close to the fire. But it's funny here. It's like. Virtual landowners can establish the cost of renting per day, the desired duration of the lease, and the tenant pays the owner through Mana, Decentraland's main cryptocurrency. Once the rental period expires, the virtual landlord must manually decide whether to claim their property, so you're getting evicted in the metaverse, or put it up for rent again. Decentraland said a potential use case for the system would be a virtual DJ who could rent a space as a nightclub for performances. It's like, hey Don, do you want to come out today? Sorry, bro, I'm at a fucking Decentraland party and my mate's just rented out this club. I'll be right back. Just send me some mana, bro, please. I'm talking to this really hot girl. It's actually a dude, but I'll figure that out once I send, fucking Bitcoin to his address. I'm not ready for that type of future.
No.
Although it'd still be better than my current social life, not gonna lie. Oof. At least I said it, not you. Anyway, did we wrap it up? That's got to be the low, right?
Yeah, that has to. Let's move on from that.
Doesn't get any worse than that. Cool. That's it from us. Doug, thank you for your insights as ever. To our listeners, leave a like on this video if you enjoy Casual Friday. Thank you for all your support on the channel. Subscribe, share it with your friends. I know the YouTube algo might show you this, and you're not subscribed. That's not great. Just click that button and help us out and do all that sort of stuff. Have an excellent weekend. It's the weekend, right? Yes, Friday, weekend. Got it. Social life, normal people. And then we have our normal programming for you next week. Monday markets, weekly open, newsletter, and we're going to try to squeeze water from a rock if this type of volatility continues. But we've been just about managing so far. Take care. Have an excellent weekend. Don, thank you again, and we'll see you guys later.